Eurasia has unveiled its top risks report for 2026, citing the U.S. as the principal source of global risk. Now let's get more from Gerry Butts, Vice Chairman, Senior Advisor, Eurasia Group. Thanks for joining us today.
Oh, it's great to be here, Marilla. Happy New Year.
Same to you. I was looking at this report. It's an uncomfortable read, to say the least.
Yeah.
Would you say the U.S. has already been sort of the biggest source of global upheaval last year?
Oh, for sure. And for the past several years running, I think for Canadian viewers in particular, we're accustomed to having the U.S. be the most important shock absorber of political risk in the world. And for the last few years and for the foreseeable future, it'll be its most important generator.
So what do you see changing this year?
Most importantly, it's an acceleration of institutional decline in the United States. Last year, when President Trump was about to be inaugurated, when our report came out, we highlighted what we called at that point the rule of dawn, and that meant that we expected President Trump in 2025 to feel, at least compared to the way he governed in the first term, relatively unencumbered by any of the guardrails that were there when he was president the first time. And I think what we've seen is exactly that. And as he approaches a very difficult midterm season, we expect that process to accelerate.
Okay. Does this process, as we move forward, include moving on other countries like we've seen him move on Venezuela?
Well, I think that's the challenge with this risk, Marilla. It's really hard to tell day to day. Had you asked us last January, we would have said the chances of him sponsoring a coup in Venezuela would be pretty low. Had you asked us in October, we would have said it was pretty high. So part of the challenge of moving from a world where you've got an international trading system and a geopolitical arrangement that's based on rules to one that's based on deals is you have a very difficult time figuring out what comes next. And I think we're telling investors and our clients around the world to prepare for the unexpected when it comes to the United States in 2026.
What would you say has been the effect on Europe so far, and how will that manifest this year?
Well, as you see in Europe, I mean, Europe is kind of the sick man these days, or the sick woman. They've got a bunch of weak governments in really consequential countries. You've got a prime minister in Great Britain and Keir Starmer who's under siege. You've got President Macron who's headed toward the end of his mandate. Germany's in rough shape. It's a very difficult, unstable political environment. And when you couple that with the pretty extraordinary national security strategy that the United States published a couple of months ago that basically says they're going to ally themselves with political parties that share their view of the world rather than governments that share their values. That's quite a difficult situation for Europe to be in. And of course, here in Canada, we're all thinking about Greenland for obvious reasons, and the Europeans are quite seized with that. The Danish Prime Minister said yesterday, if this is a serious thing, it's the end of NATO. And there's probably nothing more serious than that for Canada.
Yeah. Another serious thing for Canada is what happens with the trade deal for North America. And you're saying it will be a zombie USMCA. What do you mean by that?
Well, we mean that it'll be an agreement on paper, and it will probably be the one we have now, but it will be very difficult to enforce. As your viewers may recall, in the last round of negotiations that turned NAFTA into the USMCA, the main sticking point at the end was whether we were going to have a independent third-party dispute resolution mechanism. And it's almost comical to think that Donald Trump 2.0 would sign off on such a thing. So that means that we're going to face a year of pretty bellicose threats from the United States. The government here will have to steel its nerve to stand up to those. And the upshot of it all is, unfortunately, we're going to have a semi-permanent lack of certainty for investors in North America.
How do you see the China-U.S. relationship changing in 2026?
Well, here's one where last year we called it as a red herring that there was going to be a great power conflict between China and the United States, which a lot of commentators thought was going to happen heading into Trump 2.0. We thought that Trump would realize pretty quickly in his mandate that the Chinese have real cards to play that could cause him political harm and cause the United States economic harm. That's precisely what happened in April. And I think since then, you've seen Trump settle into almost a rapprochement with China. We don't expect any major conflict between China and the United States. It's kind of strange that that's one of the few places where we don't see significant conflict and risk for investors. But longer term, that's still a relationship that's going to be restructured, but we just don't see anything material happening in 2026.
Interesting. Okay, let's talk about AI for a moment as well, because all the talk has been AI for the last couple of years, so much growth last year. What is your take on what happens for 2026 with AI?
The main thing is that there's going to be a backlash against the companies, and our risk is called AI eats its users. Basically, the pitch that AI has given the public so far has been, first, we're going to raise your energy bills, and then we're going to take your jobs. And in a year where a lot of Congress people in districts where giant data centers are being built are going to face re-election, that's going to bite politically. So we're going to see a backlash this year is what we expect.
Gerry Butts, good to see you. Thank you very much for sharing the details of that report, and we'll talk again soon.
Thanks very much, Marilla. Happy New Year.
Same to you.